Oh, yeah. What's up? It's Sunday again. What's going on, Kevin? You are here, man. Kevin's here, everyone. The Dividend live stream may indeed commence. So, my computer sounds like it's about to take off. So, obviously, I think that means we're live. We're good. We're going. We're rolling. We do it live. Do it live now. So, anyways, I missed you guys. I really did. I was over in Lafayette, Indiana at the wonderful, fabulous Purdue University. And I don't know, I'd never been there before. It seems okay. It's Indiana. I apologize to anybody that lives in Indiana, but hey, um, so shout out to anybody that's a Purdue alum. We got a big dividend portfolio update, made some really interesting moves, but first and foremost, and most importantly, I saw a movie for the first time in forever, Evil Dead Rise. I don't know if you're a horror movie fan like we are, but uh, Bruce Campbell, we miss you. The Evil Dead movies are not the same without Bruce Campbell. So good to see you, Shamir from Canada. Always here, always supporting the streams. I love it, man. And let's see. Hey, you know what? We'll start right with this. Yeah. No, I got you, Steve. I got you. And I'll just jump right in and answer that. So it's just not wanting to have too many companies. And I still am following the footsteps, in my opinion, of the one and the only Warren Buffett, Charlie Munger, the gents over there at Berkshire Hathaway, that yes, you buy and hold forever, but if a better opportunity comes up, why wouldn't you just keep buying it? Also, there are a lot of positions I've had without a lot of conviction or due diligence. Still good companies, still solid, but I feel like I can have better total return in some places, and I understand these businesses a little bit more. So I'm just laying it out there, man. Just I'm not going to I guess what I'm trying to say, and correct me if it sounds wrong, but buying something and holding it, forever when you see a better opportunity out there. I mean, why wouldn't you just go into that opportunity and hold that forever? Like I've been doing with Nexstar Media. I think they're undervalued. They're a cash flow machine. They've been increasing that dividend really nicely. So that's all I'm saying is I love sharing it. I love sharing my thought process, my evolution. Not saying it's right, but it's so cool for me to be able to do this and really talk with you guys and hear what you have to say. And I really do love your guys' input and opinion because obviously I don't know everything. And it's just, I just feel better. I want more companies. So I'm wearing the J&J today because they had a really, really good earnings. We'll get into that a little bit. They just keep making money. They're spinning off Kenvue. I'm thinking of buying a share a week until they do that spinoff. That may be the new one. I think I'm at 25 shares in the bridge. I have exposure to them in the other portfolios too, but I was reading a little bit of I was reading a little bit more about Joaquin Duarto, their CEO who took over in January 2022. Really interesting. He's their first CEO, by the way, to hold dual citizenship. He's a Spaniard gentleman, or his roots are in Spain. He really loves technology and bringing J&J and fully embracing technology and AI and machine learning and integrating with medical technology. MedTech platform, by the way, they acquired Abiomed. We'll go with Abiomed. Abiomed, part of their MedTech platform. If you guys don't know, Abiomed makes the Impeller heart pump. It's the world's smallest heart pump. So J&J acquired them, brought them on board, and now their MedTech segment has 12 platforms bringing in over $1 billion in revenue a year. So that is just really cool. And, they've got the talc liabilities, right? But man, they don't want to hurt people. Like that's not J&J's MO. Bad things will happen. Things will happen, but I really don't think they wanted to give people cancer. Do you know what I mean? Does that make sense? So yeah, I'll just say good morning to all you guys. We will get, you know what? Why don't we just jump into, I'll throw it up on the screen right quick. Here we go. All right, before I do that, Phil, buy and hold forever is a myth. Bussett doesn't do that. Who's Warren Buffett? It's his evil twin. Yeah, he sold TSM. Good call. And right, we need to do this. And I think it's following in the footsteps of giants is that, man, he bought TSM, but things look bad. Like they could potentially be invaded by China. God forbid. I hope cooler heads prevail and that whole thing doesn't happen. But and that's another thing, right? I was listening to Howard Marks a couple weeks ago, and he loves investing into things when everybody hates on it and they're dumping on it, like China, with the whole everyone saying China's uninvestable. But we need them, they need us. We're two superpowers that are economically intertwined, and it's just they can't just cut themselves off from the United States. It would hurt them, but we'll see what happens. But there you go, Phil. I love that, man. And that's exactly my thought is that we need to be able to adapt and evolve. And it doesn't help anyone to be so rigid and say like, and believe me, I've done this with probably AT&T and Verizon is like, nope, I bought them. I'm holding them for until the end of time. And it's just, we got to be flexible and do what makes sense for us. So share your thoughts on that as well. And let's see here. We will get to, hey, on a New England day, salute. I don't think I saluted you guys. So, all right, here we go. We'll show you guys just the quick, which I did put into the newsletter. What's up with my mouth today? Come on. So let me see here. Give this old guy, oh, by the way, I can say old guy now. Give this old guy a second here because I'll just share the entire screen. Here we go. Do like this. Boom. So here is for you, big and beautiful people. I don't know. Am I on the screen here? There we go. I need to make that bigger. Hold on. Come with me for a second as I do this and give you a little bit of streamception. There we go. That wasn't too bad, was it? All right. So yeah, Boise Cascade sold the 10 shares of Boise Cascade. Again, I've had a lot of ancillary positions that I'm like, I'm going to start them. They look undervalued, buy them. Oh, that company looks undervalued, buy them. So many companies that I was just buying because they look undervalued. And then something else gets my attention. I'm like, oh, but J&J is down. I'm going to buy them. And then I've just got all these companies littered in the portfolio, 5 shares here, 10 shares there. And I'm just thinking like, I think there's better opportunities that I would just rather use that cash and consolidate into. Not go in the way of KC, maybe ever, maybe just yet by having 3 or 5 positions. I do enjoy, part of this is just what we love as investors. And I love owning businesses. I had a little tete on Twitter we can talk about in a minute too. But even just get through this. So Boise Cascade, good company. I think they have a lot of upside, but I think companies like Nexstar Media and Celanese have even more upside total return potential. So sold that. You guys may have seen the video I did. There's the 10 Procter & Gamble shares. I expected a little bit weaker earnings than they had. And, that was the gamble. And the joke I said was, it doesn't matter because if I held, the shares would have went down. They would have had poor earnings, but because I sold, they were guaranteed to have great earnings and the shares popped for $5 a share, whatever it was, but lost no money. We still made 23%. On the right column there, you'll see the dividend income that was lost. Verizon did some tax loss harvesting because AT&T, yes, it was bad, but I think that as Pascal Duro said in the earnings call that their high water mark of CapEx spending coupled with some storms and weather events. Yeah, maybe he's blaming it on the rain, but they say that it's their high water mark for CapEx spending, which is going to reduce the free cash flow. So they had a much lower than expected free cash flow number. But if we look at 2022, they started the same way. And then every consecutive quarter up until Q4, they start grabbing more and more cash flow to the bottom line. And I think that should help pull the share prices up. So tax loss harvested on Verizon, rolled that into AT&T. And then BMO, I just, with the uncertainties in the banking, Shamir shout out, there's still a solid company, but I would just rather put that into, you know, I guess I'm saying I wouldn't build them up to 100 shares or something like that. So I just had to step back and say, what am I doing? Am I just having them there to look nice and just see another name? Or would I rather put that money into a couple more positions that have a little bit more, um, I don't know, a little more swagger? And then we'll just quickly go through the buys. Because we always say that you sell for myriad reasons, but you buy for one because you think the stock price is going to go up and you think the business is going to do and keep doing well into the future. So 3 shares of SCHD. I'm at 99 of theirs. Don't know why I just grabbed that 100th. I guess I'll do it this week. Franchise Group. There was a little bit of news on their front. That disclosure, the 14, I forgot. I just plumb forgot. 14D, I think, where Brian Kahn had to disclose that if they did sell the company, he would receive 33.3%, I believe. So it looks like $30 is the minimum that would go through for if it's ever accepted. But there's some smoke there, and Franchise Group may be acquired. They're right around $28 a share right now. Just adding to Ares Capital because they're below their net asset value. Loving them. Could see some headwinds. We can talk about them if anybody wants. The 85 shares of AT&T. You can see the dividend income on the right. Everything that I bought, or everything that I'm now getting, and just AT&T looking to exit them in the quarter 4. Hopefully, if all things go according to plan. I mean, they say, man, what is it? Man plans and God does something. God laughs, right? So we'll see about that. But I rolled all that Verizon money just right into AT&T, and of course they jumped up to 18.25 the next day or so. And 3 shares of Target. From the video, if you haven't seen, I'm sold the Procter & Gamble. I'm going to be rolling that into Target. So slowly but surely, was it Don't Call Me Shirley? So just started that position, those shares at 160.99. Not started. I already had 10 shares. I added to that position of Target, dribbled in a couple more shares of Realty Income, in Innovative Industrial Properties, the cannabis REIT, the medical cannabis REIT, definitely risky. And it's a well-run company, but I think there's a lot of things that are not in their control that could affect their tenants, which will affect IIPR. But I'm willing to take the risk and side with a company that has a really good balance sheet, a really good management team, and we'll see if they can navigate these little bit of troubled waters. And then just 4 more shares of Celanese. And Celanese, they make chemical additives that go into food, plastics, automotive, electronics. Like they're kind of the the Wizard of Oz. They're behind the scenes of everything going on. Just a big, solid company. And I like their CEO, Lori Ryerkirk. She's very knowledgeable. So all in all, you can see I lost $189.90 of dividend income, and $212 was added. So just a smidgen above with that. So that's the big portfolio update. And now I'm going to get into what you peoples is talking about, right? Yeah. And how is your week going? How is your week? It just started, right? Sunday's the new week. What do you got planned in the markets this week? What are you looking forward to? I think I'm going to buy another share of J&J, at least. Just get my feet wet. It's been a minute. I know I told you guys I was waiting to go into the 140s with J&J. Doesn't look like it's going to happen. And I just, you have to pick your battles. And I think that I was wrong on that. 151 should have bought there. So I think I might start dribbling in a few more shares of J&J because, like Wayne Gretzky said, man, you got to go to where the puck is going to be, not where the puck is at. And the same thing I think can be said of investing. Where is a company going? We know where they are, but where are they going? That is the key component that I enjoy talking with Casey about. Like she shares Harrow Health, ticker HROW. Like, where are they going? Always invest, and the market looks through the windshield and not the rear view mirror. So, and as I say that, it popped into my head with Charlie Munger, right? Saying that If a company has a lousy track record, but a bright future, we're going to miss it. So that's kind of interesting. Interesting thought there. Yes, dude, Kevin, I agree. You are the CEO of your portfolio. And I'll add on top of that, we don't have to beat a benchmark. We don't have to have performance results for clients and say, look, we're going to beat the S&P by this many percentage points. And if we don't, we'd have to worry. No, it doesn't matter. Like, that's why we have so much more freedom and time, and why we should never follow a lot of fund managers, because sometimes they're making moves just so they can show those paper gains to their clients, what we did. And it might not be the best long-term strategy or move, right? So, yeah, T's going on the chopping block with VZ. I'm with you, buddy, but I'm stubborn. I don't know if you guys are like me, but I look at their cost basis and I'm like, I got to get back to that at least. So by tax loss harvesting Verizon, I was down a good amount, over 25%. Tax loss, that money can offset any capital gains. So just rolled it right into AT&T, which I think it was a little bit overdone, a little bit of an overreaction. So let's see. Do you think I would have held PG if I had more shares? Most likely, I probably would have. And that's a really good point, because it looked like, yeah, it was kind of an ancillary position, right? I mean, 10 shares. I was joking with my wife. She's like, you should have put on the video. I sold all my PG, or sold out of it. And it's funny because, yeah, if you have one share, I could be like, I sold all my Procter and Gamble. What did you have? Like 800. I had half a share, a little clickbaity, but hey, still true. But to answer your question, if it was a PepsiCo size position for me, it probably would have been a tougher decision. So yeah, I think that went into it, where I could see myself building up to 100 shares of Target, just because I like their valuation where they're at. And man, never say never. I would still buy Procter and Gamble if, as I was saying on Twitter, if they came down to 125 again, 120, 110, I'd be adding. Like, I'd be crazy not to. But I just think they're a bit overvalued here, and I think Target has a little bit better total return potential from here. Could be wrong, just my opinion that I'm sharing with all you guys. Kind of live without a net, right? Yeah, Ryan won't talk. Well, I'll burst your bubble. He's still talking to me, but we haven't talked about that. So shout out Bubbly into PepsiCo. Let's see. Oh, by the way, I really enjoyed it. At the beginning of the movie, when we saw Evil Dead Rise, we were watching the previews, which, by the way, do you guys, if you go to movies a lot, what's the deal with that? The movie started at 7:00. We got into the theater at 6:58, and they were already running ads and previews. The movie started at 7:30, 30 minutes of ads and whatnot. But they had a Dorito ad. They had Starry, which is PepsiCo. They had Mountain Dew ad, and one more. They had 4 PepsiCo ad. Oh, Pepsi. They just had a regular old Pepsi ad. So I thought that was kind of cool. Yeah, down on BMO. So look into average down. Yeah, like I said, I was up a little bit on it. I think $89 was my average. So I got out at 92, just took that little gain. The only regret I do have is not waiting, because the ex-dividend date is this week. I think the 27th is the ex-dividend date for BMO. So I probably could have waited a few more days and got that dividend, but such is life. By the way, yeah, I got a little bit. I'll get to your questions, and I'll try and catch up quick here. Oh, Neil, that shirt. Yeah. This is a one of a kind. This is one that my sister-in-law made. So on Twitter, very interesting. I've had a gentleman that, without getting too much into it, likes to tell me I'm wrong about some things. But the one thing he was pretty adamant on is saying that dividends are only paid out of retained earnings. That's it. And I said, well, what about companies that issue shares? And he's like, no such thing. And said, or they're taking on debt to pay a dividend. Again, no such thing. And he said it's not paid out of free cash flow. The dividend is only paid. And he'll go on to say that he's, been doing this for over 40 years and whatnot. But I actually haven't got on this morning. I put that out there. What do you guys, am I wrong? Right? From my understanding, everything I've read, studied, learned, that free cash flow, there's four things you can do with free cash flow. You can carry it as cash on the balance sheet. You can um, pay a dividend. You can buy back shares, or you can pay down debt. From what I understand, those are pretty much the four things that you do with free cash flow. And the dividend is paid out of the free cash flow. That's been multiple sources, multiple books, multiple minds that I've heard that from. So it's just kind of throwing me for a loop to hear somebody so adamant saying, no, you are wrong. You need to learn and study more. Dividends are only paid out of retained earnings. But as I look at it, it's on the statement of cash flows, right? You have the free cash flow at the bottom, and what's before that is the dividends paid. So retained earnings is on the balance sheet. The dividends paid, right, I don't believe are on the balance sheet. So if any of you guys watching know, correct me if I'm wrong, but I did ask it in Twitter. I said, I'm being polite. I said, interesting conversation with, which I don't, he's a Canadian, and it said, I think John Kopp CMT. And there was another gentleman that was chiming in. I'm assuming they know each other, telling me I'm wrong about things. And he also has CMT after his name. I looked it up. I can't find that acronym anywhere. So does anybody watching know what CMT means? Is that like a Canadian version of a CPA or CFA, something like that? I would love to know. So let's get caught up while you guys are answering that. Yeah, Coke, McDonald's, and PepsiCo, obviously going to be always interested to hear about those companies. And shout out to the Quarter app, QUARTR. You can also listen on the Seeking Alpha app to the earnings calls. And it's just really cool. I really am enjoying it. Maybe I'm crazy, we've covered that, but I love putting in all the companies I have. And it's mainlining the earnings reports, the earnings calls, the earning calls makes it super easy to listen to them, like 1.25 speed. I put it on, and it's just so knowledgeable that I'm working and driving and able to listen to these. It's just a wonderful world we live in. All right, Dan, what's going on, man? Done buying Abbott and Schwab. They ran up nicely. Got to sell it. Sights set on healthcare companies like Cigna for my next buys. Yeah, interesting. I've never really looked into Sigma, but Schwab, that was one I looked at, and I thought they were kind of overdone. I listened to their earnings call, and they had a lot of pushback saying that we're not a bank. We don't do how did they say it? They don't lend to companies and businesses that are trying to grow. So they're just saying we have a banking segment, but it's different. It's not our core driver of revenue like for a Silicon Valley bank. But yeah. Working his way up on Kroger to do calls, adding Williams-Sonoma. Hey, Williams-Sonoma on the radar. Talked to my wife about that one. May eventually be getting into that. Hey, what's up, Trevon? Thinking about buying more USB? Yep. I haven't really looked into them. I know people in the community have said good things about US Bank. I did listen to, I don't remember which one. I listened to one of the investing podcasts, may have been a Motley Fool. And I think they targeted 3 banks that were kind of unfairly beaten down. And I know USB was one of them. Ally was another. And I don't remember the third one. I think it was Schwab. So I think they had Schwab, USB, and Ally as unfairly beaten down. Love it. Here we go. Rapid fire. Shamir's been adding to Tyson Foods, Altria, SCHD, Realty Income, Toronto Dominion, Royal Bank of Canada, VYM, VNQ. VNQ is the Vanguard Real Estate ETF. I don't remember VPU and I don't remember VYM. So please forgive me, everybody in the community. Yeah, itching to get on some John Deere. That makes me think, Neil, of Tractor Supply. They first came I first came on my radar. Stupid, right? I first came on my radar about April 20th, 1978. No, I've Tractor Supply first came on my radar a few years ago, and I just thought, like, oh, they look expensive. But interesting, they don't sell tractors. Why is that? Shilling for Pep is them. Why do people sell in May and go away? Right. So the month after, so May, I think, is one of the worst months. People are getting ready to go out for the summer. Retail investors, institutions, it's summer vacation. People aren't paying that attention to the market. Kids are on summer vacation. We're busy. We're doing things. So it's kind of like that lackadaisical time in the investing world. But I didn't, I don't know. There's studies on it. I've never done it. And I think you would be down. That's a good one. I'm sure there's been a video done on it. I should know more about it. And honestly, I don't look too into it because in my mind, like, why would I sell PepsiCo? So and so what do? I sell all my stocks and go into cash in May. And then what? When do I buy back in? Like it, just on the face of it, it makes no sense because a great company is still a great company in May, in June, July, and August, and December. Like, you know what I mean? So it doesn't make sense to me personally. Yeah, another USB loading up on. I love it. Yeah. You can buy another company. Oh, yeah. Good point. Good point. Okay, here we go. Let's see. Thank you for Mariana is wrong. So again, and it's on Twitter. I haven't been on, I was doing my newsletter and kind of prepping for this. And I just wanted to ask it because I'm like, I don't know, dude. I'm like, let's bring it to the community because I'm pretty damn sure that dividends are not paid. So, right? That's just the shareholders' equity. That's everything that has not been paid out, the earnings that have just been retained. So I thought it was interesting. Let's see. So thank you for sharing that, Mariana. Steve says he thinks I'm right too. And hey, you know what? I think one of the Stoics, I don't think it was Diogenes, probably Seneca or Epictetus, one of them had a saying that all I know is that I know nothing, meaning like you should always be questioning yourself because you could be wrong and you should always have the possibility open like, hey, I might be wrong. Let's find out. So I think the world would be better if people would always say like, I wonder if I'm wrong here. Let's explore it and figure it out. And, where it's just not good to have that closed shut mind. I think. Country music, yeah, CMT. Hey, they may be. Oh, what's up? Dude, you got to be back. I got to have you back on. We got to have a big old roundabout with a few more people here eventually. So Craig, let's see. I'm sorry, my buddy Stan said chartered market technician. So is that like somebody that reads the charts and does technical analysis? Oh, by the way, so you may have seen this little back and forth I've had with John Kopp. He told me, he said that all you need to know about a business is the chart. That's it. And I was like, what? He says fundamentals lie and charting is, he says, I've been doing this 40 plus years. The only thing, you don't need to read annual reports, anything. The only information you need for investing is the chart and the chart patterns. And I was like, that's crazy because how, and I think, I said, I don't take you seriously because how can you honestly say you can understand the direction of a business and the revenue that will come in based on past price performance? But he even said, no, it's all baked in and that's all you need to know. 40 plus years, yada, yada. I've never looked at an annual report. I've never looked at a balance sheet, any of that, which now that I say that is the guy that's telling me that dividends are paid from retained earnings. End of story, I don't know, but interesting. Any thoughts on the markets will be this week? I don't know, buddy. Here's my assessment, my profession. I'm an amateur. I'm an amateur like you guys, just sharing. And this is what's going to happen in the markets this week. I think they're either going to go up, but they could also go down, or I think they could just go sideways. So chances are one of those three things will happen. Actually, lock it in. I guarantee you we're either going up, down, or sideways, right? Put it on a shirt, sell it. Dividend income is one hell of a drug, I want to say, on a shirt. Buying REITs and BDCs. Hey, Shaping, what BDCs are you buying? Do pray tell. I know my friend Ryan Williams likes Owl Rock. I like, it's a funny thing ever since, and shout out to the main man, Ian Lopic, since he had Greg on, and they really shifted my mind about BDC investing because I just kind of had the stink eye toward them. But I went into two of the safer ones, which is Ares Capital and Main Street Capital. Thank you for correcting me on that. The VYM, there it is, the high dividend ETF. Oh, and the Vanguard Utilities. Yeah, VYM. I know. I'm going to pull my dividend card. I should know VYM. And I know that's probably one of the ones that people do videos on about they're going to perform better than SCHD, right? Cool. Nice. So you're buying Ares Capital along with me. Yeah, we'll see. It is a little bit, no, I wouldn't say worrisome, but I think 85% or 82% of their new debt, it's fixed rate. So unfortunately, when rates eventually come down, they'll be bringing in less money. But right now, I think they're smart enough to know from what I hear in the earnings call. Penelope Roll is their chief financial officer. I swear to God, if you didn't know that, Penny Roll is the CFO for, it sounds fake, for Ares Capital. And she even says, like, we're building up the spillover, which is almost like your rainy day fund for the dividend, that if they run into a couple rough patches, they can pull from the spillover account and pay the dividend out with that. But yeah, they're aware of it. They know that they're over earning right now, that times are really, really good for Ares Capital. But when rates do come down, and assuming that we don't go into a severe recession and they just start having all kinds of defaults, that they're going to be okay and they're going to navigate into the new world. So the new rate world, we'll see. Hey, there he is. What's up, John? What's going on, buddy? Did I just randomly start the show now? No, I scheduled it last night. I was out last weekend because we were at a volleyball tournament, and I was gone from 7 a.m. Saturday morning until we stayed overnight in Indiana, and I got home in the evening on Sunday night. So, but no, man, let's see. CMT is a course. From their web. Oh, okay. It's starting to come together now. CMT designation develops deep knowledge and technical analysis. Okay. So it's not. All right. It's starting to make sense now where, yeah. Okay. Thank you for sharing that. Thank you. Let's see. You know what? I didn't see what happened to Coke. What happened to Coke? Do pray tell. Let's see. 43, 50, and 98, and took till 2018 to get back there and beyond. Oh, I'm a little confused. So, yeah, I'm not understanding that one. So Coke was 43, 50, and 98, or was that Pepsi? I really don't remember. It took back till 2018. Well, I don't know. It's where they're going, to me, where they're going in the future, and we'll see. I don't know. Can give us a little more color on that? Yeah, sounds like they are traders, and that's the thing, is that I don't want to trade. I've tried that. I tried swing trading, and this is what led to dividend investing, the sleepless nights of having hundreds of dollars on the line and worrying about the next morning what it was going to open up at, and reading the chart and wondering if the chart was going to stay true, because this pattern is setting up. I won't get into it, but there's various chart patterns. And I think it was Warren Buffett that said he started out believing in charts, technical analysis. So reading charts is technical analysis, and looking at the financial statements and the annual reports is fundamental analysis. So Warren started out with the technical analysis, like chart reading and trying to predict what was going to happen. And then he said it changed for me when I turned the chart upside down and got the same result. So yeah, chart is a voting machine. And you know what? That was my thoughts too. Oh, we need to get into some dividend news. Let's see. I'll get caught up and then we will do that. Um, all right, let me get a few more comments. I want to get caught up live before we do that. Coke took 20 years to get back to its heights. No, that's fine, man. There's no raining, man. It's all information. Everybody is just share your information. I love it. The one thing I always say in life, and like I tell my kids this, is never, ever, ever, and oh, you guys remember this, never attack a person. You always attack, it's a kind of a wrong word. You debate their ideas, not the person. You never talk about somebody's, and I told this to my kids, their physical appearance. You never talk about something they have no control over, but you always engage with the ideas and you try to do it civilly, like not, and you know, a lot of people in the world don't have training or they don't think about this. So it's just the way they were brought up. But man, you're not going to offend me. Not at all. If you have an opinion, all I say is just bring it up with some facts. That's it. And it can make all of us better for it. You can't say you're a moron and walk away. That does nothing for anybody. Say, I think you're wrong and here's why, you know? So yeah, that's fine. But if you're just looking at share price, I mean, I know they did reverse splits. They've had lots of dividend increases, honestly. So I would ask, have you factored in, other than just the share price, have you factored in all those other, like the total return, not just share price? Because if we were to do that, I shared on Twitter a really interesting chart that putting $10,000 into Annaly Capital, ticker NLY, and J&J in 1990, what was that year? 3, I think, whatever 25 years ago was. I'm bad in math, people. J&J slightly outperformed Annaly Capital with all of their share dilution. Well, I mean, they're two different industries, two different businesses, but we all think J&J is just big, solid blue chip. And something like Annaly is really risky as a mortgage REIT. They have to issue a lot of shares. They raise and they cut their dividend. It's always yo-yoing. But man, it's been a lot more volatile, but it's been just slightly worse than J&J in total return. So that would be my one contention on that. Let's see. Coke and yeah, no, they're not that different. I mean, yeah, it's fine. You know what? Actually, here, check this out. Let me set this up. I got something to show you about Coke or PepsiCo. Why I'm not terribly worried about good old PepsiCo. All right. So this is I've been keeping a running tab of my adjusted cost basis for the one and only. Here we go. This should work. We can go right to it. Look at me getting all fancy. Ba-ba! This is my PepsiCo adjusted yield on cost and adjusted share price. So all I've done is, let me hide the, I'm blocking it. I got to hide your name here. Hold on. Sorry, John. All right, here we go. So this is what we're doing. Currently, Pepsi is 185.41. I think it's overvalued. 10 years from now, it may look like a good price. Current dividend yield 2.73. The average, this is my average share price, just without anything, is 150.37, 3.37% yield on cost. Now, all the dividends I've ever received. This is just simple, not per, I've received almost $756 in dividends from PepsiCo from day one, plus $338.50 in options income, which added together equates to about $10.94 per share, the 100 shares, right? So if I figure that out and I do the calculations, I get an adjusted average share price of $139.43 with an adjusted yield on cost of 3.63%. So in reality, every time I receive a dividend or sell an options contract, that lowers my cost basis on PepsiCo, but that doesn't reflect in Schwab in the brokerage account, right? So I just did this for myself. So realistically, my cost basis is $139.43 per share of PepsiCo. So it's got a ways to go to get down to that. And honestly, I think if Pepsi's getting $140 a share, I think a lot of people would just start buying, which which is, yeah, that's my thoughts on that. So I'll always be careful. And again, PepsiCo does that have that 110% free cash flow payout ratio per share, which, man, that's why I emailed them and they reiterated and said in so many words, like, yes, we know it's high, but that's because since 2018, our capital expenditures have gone up like 23%. So they're spending a lot more money to grow the business and invest to make PepsiCo continue to be that behemoth and continue to grow. And eventually that will trickle down. Hopefully, that's the eventually part, will trickle down to the bottom line. Some New York Mortgage Trust. Hey, what's up, Paulo from Portugal too? That's awesome. Hey, I'll be overseas next month. I'll be in beautiful Ireland. And we just did, we just covered that, Shamir. I did. And they also shared the CAGNY 23, the consumer, I think it's Consumer Advocate Group, New York 23. I don't remember what the A stands for right off the top of my head. Let's see. All right. We're going to do news here in just a minute. Frequent regarding stocks. So I'm Simply Safe Dividends, alphaspread.com. Seeking Alpha is a big one for news. Sometimes NASDAQ a little bit. I just did find a new one, stockanalysis.com. That one is, that's pretty cool. Stockanalysis.com. It's free. They've got a ton of information. And then a little bit of Yahoo. So those are the big ones, I would say. Market Beat a little bit. Probably those 8. Geez, 8. All right. Kevin, we'll do it in just a second here. Let me get caught up. I know, 41 minutes for cry. I'm almost caught up. I just don't want to be like Ryan Williams. He's a bad influence. He's a bad example. He gets so far behind in his comments. He's the guy. Like, hey, aren't you the guy that just said to not attack people? Well, I speak with him frequently, and we've become friends, to say the least. So if anybody's watching, there's no beef there. Although, that gives me an idea, because do you remember a few weeks ago when Chipotle and was it Sweet Green? I forget now. Just shows how much it worked. Anyway, I think it was who had the Chipotle chicken burrito. And then Chipotle said, we're going to file a lawsuit. And it was big news, right? For like a day. And it was on National Burrito Day. So I think that was manufactured beef, even though it was about chicken. So it was manufactured chicken burrito beef, which is what? And I think they did that to get both companies' names in the news. And then what happened? Sweet Green or whoever it was said, oh, you're right. Who was it? It's going to bug me now. They said, okay, we'll change to a different name. And then it went away. Okay, we won't sue you. I was like, you son of a guns. You got your names in the news. Free publicity. I need to do that with Ryan. He has the worst YouTube channel ever. Don't ever listen to this YouTuber. You're going to see me put out a video. We can start a beef. And then at the end, we'll be like, we made up. We're friends. Yeah, we wouldn't do that. But hey, let's see. All right, I said I was going to get caught up. I'm almost there. I'm not almost there. Crying out loud. All right. Paulo, cannabis stocks like Tilray and Aurora Cannabis. I think it's risky. I think the market is shifting. I want to stick with the companies that are more the picks and shovels, like IIPR. That's my thought. But yes, things are moving and shifting, and they're not as hot as they once used to be. So I would personally rather stick with the companies behind those. Let's see. Coke, Pepsi at all-time highs. I'm sorry if I'm going to misuse. I want to, yeah, you're welcome about 3M. I appreciate that. Yeah, I should do something more on them. I did put a couple of nights work into that, reading and just trying to gather everything I could on 3M. All right, I'm going to get caught up to you guys. Oh, there he is. Look at this. So he caught me talking about this guy's channel is terrible. Don't ever listen to this YouTuber. And then he can do one on mine. But that would be punching down for him, right? What's that term? If you attack somebody with more, in the world of social media, if you attack somebody with more followers, subscribers, whatever, it's called punching up to try and get your name out there. And the best thing for them is to like ignore you, because then it's punching down, which there's not as much. So there you go. If any of you guys want to, punch up and try and get your names out there, punching down, there's not that much benefit toward punching down, where for someone punching up, there's a ton of benefit, because if the person they're punching up to engages, then they're helping to put that person's name out there, if that makes sense. Oh, you walked in at the perfect time, buddy. Let's see. All right, we're almost there. It's almost there. I did talk about a T for a little bit when I was doing we can talk more about them. All right, here we go. Because I promised it and you guys like it, the quick dividend news from Simply Safe Dividends. All right, I got to get there first. Oh, here we go. Latest. So I think this is big enough. Let me make this big enough. All right, there we go. Boom, full screen. Let me start at the beginning, which is not too far. So on the 17th, Southern Company, shout out. If you invest in Southern Company, raise their dividend 2.9%. I hope this is big enough. That's too big. Stop, it's too big. 3.8% yield. So Southern Company, J&J, there we go. We talked about a little, raise their dividend 5.3%, just steady Eddie. And again, like I said, the more I'm looking into them, I'm really liking their leadership under Joaquin Duarto, and he's very tech and AI focused and bringing J&J into the future and thinking long-term. Gold miner, they gave them a downgrade from 50 to 40, which I do have more gold to sell. Travelers Insurance raised their dividends 7.5%, 2.23% yield for Travelers. And Costco, Charlie Munger's Jam, raised their dividend 13%, but look at that. They're just so solid. That dividend is only 0.81%, but do they have a 99? Yeah, 99 safety score. Super solid. A couple more here. Sonoco, ticker SON, raised their dividend 4.1%, 41 consecutive years. Interesting. One of the other books I'm reading is about David Ogilvy, the advertising genius and guru. He mentioned Sonoco as one of their first accounts way back in the 60s, I think, 50s, 60s, something like that. Just these refreshed means they reviewed and they reiterated their public safety score of, or their public storage safety score of 96. And then the last one, Community Trust Bank Corp, they also refreshed or reaffirmed, there it is, or reaffirmed the dividend. So that's it on the news. Like, obviously this is tongue-in-cheekish because there's so much news out there, and it just makes it easy, whatever Simply Safe shared. And then let's see what we got. Yeah, so what do you guys think about AT&T? Are you going to buy any more? Like I said, I got lucky. I thought it was a little bit overdone. And this is where listening to the earnings calls can really help, because that's where I found out when Pascal DeRoche, their CFO for AT&T, said, hey, Q1 is our high water mark for CapEx spending. And it was because of this, and this. Few factors. It was a little bit higher than we intended, but it's going to be less in the quarters ahead. So I looked last year. You can do this yourself. Pull up the quarterly numbers, go back to Q1 of 2022, and you can see it was low. And in Q2, 3, 4, every quarter it was growing. So we'll see if that trend continues. And my opinion is that when they're able to report probably some earnings beat in Q2, it's going to be important. That's what I'm going to be watching for. We will see if they start coming up. I didn't catch that. Kevin, thank you for sharing that. Fox Business did a fluff piece on Tilray. I remember when Tilray was really, really big. Share price was huge. And talk about overvalued, right? That's probably when I paid $10 a share for Aurora Cannabis. That was a learning lesson back in 2018. Yep. International, any good international stuff in Europe? Well, let me tell you what, you're in for a treat, because while I don't really focus on European stocks, there's a few you can. You have to listen to the Dividend Talk podcast, and they put it up on YouTube. So Dividend Talk, and look for European Dividend Growth Investor. Find him on Twitter. Subscribe to his YouTube channel. Obviously, his name gives it away, and he is laser focused on European stocks and would have a much better answer. I think one of the ones they love is Walter Skluer. Don't ask me to spell it, but maybe you can. I think it's WoltersKluwer. I know they like Walter Skluer. I think it's a law or they do something with software for law firms, maybe legal, something with legalese, I think. Let's see. Dude, yeah, same here on J&J. I think I'm going to add, like I said, after listening to the earnings call, listening to that, their med tech has 12 platforms that bring in over $1 billion in revenue a year. Kenvue, I'm really going to like them because as I sold off Procter and Gamble, I still, if you don't know, I still have exposure to them in the mutual funds and also in DIVO, the DIVO covered call ETF. So I still have exposure to Procter and Gamble, but yeah, I'm really going to be looking forward to looking at the numbers for Kenvue. Let's see what you're doing, Ryan. Holding T for, I think most of us are going to be holding T. And you didn't catch that, did you? That I added 85 shares. So what I did is I thought, so here we go. I looked at the chart and the chart showed me that it was just way oversold, just overdone. And I think a lot of people just look at the headlines and sell. But this, again, while listening to the earnings call, and a lot of times, management can be putting lipstick on a pig. You got to watch out for that. But it made sense when he said, no, we just had a really high CapEx spend quarter. So I think it was overdone. And I tax loss harvested Verizon and put that into 85 additional shares of AT&T at 1767. And then, of course, right, I did that. And like an hour later, I look and I think T was at like 1759. It's like, that feeling. It's like, well, that's fine. But because then the next day we were up to, I think I saw like 1832, 33. So that was quite a jump overnight. And again, it's just that's where learning the charting helped. Like on the chart, looked to me like way oversold, just didn't make sense. So anyway, yeah, that's what we're doing with T. Gonna dump T. Fun thing, you guys, if you're on Seeking Alpha, do a chart comparison. Total return of TMUS, T-Mobile versus Verizon, VZ versus AT&T. You'll be surprised because T-Mobile doesn't pay a dividend, cleaning their clock. I talked about it with Haley, right? That I think it was like 600% return for over 10 years. I think it's 10 years for T-Mobile, and T and Verizon were like 40 and 25 or something like that. Just both under 50% total return. Kevin, I think, originally bought. Okay. Let's see. Let me get caught up to you guys. There we go, Steve. Dude, thank you. VYMI. A lot of Europe. Nice. To tell me you nailed it. Good dividends, but no growth. And that's the killer, man, is that with the telecom businesses, especially the ones that pay a high dividend, it's such a capital intensive business that, and it's so competitive that so if I could paraphrase another thing that they said on the call, John Stanky, is that they are planting the seeds to reap the harvest later with building out the 5G. And that's the problem, the fiber. They've had to spend a lot of money on 5G and fiber, that build out, but we're going to start seeing the rewards in 24, 25. And you would hope, but then it's like, what's the next thing? Then there's going to be another thing that they're going to have to spend a ton of money on. So plus, don't buy Warner Brothers and DirecTV and all these, what they buy, Crunchyroll from Sony, or they sold it to Sony. They just buy all these things, and it's like, stop. All right, let's see. Pat, what's up, Pat? What's up, man? He's adding DIVO later in the month. I have them in our kids' wedding account, which, by the way, my wife and I were talking, and she said that may need to be a car fund for them. So our kids getting to that age, my 15-year-old just started driving. So Yeah, might be using that for a car instead, which, hey, I'm doing $100 a month, by the way, just splitting it in between SCHD and DIVO, just in that one little fund. I initially planned on using that money for weddings in the future. So that's fine. I'll just make sure the kids get married in the house here. We'll get married in the house and I'll make all the food. So let's see. Oh, what did you think, Shamir, of the tea call? Um, yeah, tech harvesting on VZ. Good point, buddy. It just made sense because Verizon was also drugged down with AT&T, and like I said on the podcast, a lot of people will do that. You'll tax loss harvest on ExxonMobil and buy Chevron. Just you buy something similar. It's almost a no brainer. You buy tax loss harvest T, buy Verizon, because if you don't know, here in the United States, you can offset those losses on your capital gains, meaning you'll pay less capital gains. But any account that's under your name, so for me, for the next 30 days, I cannot buy Verizon, or that'll violate, or it's called the wash sale rule. So I can't buy Verizon. I can sell, but I cannot buy any Verizon for 30 days. And I get to do that. So yeah, Shamir, what do you think? I want to get caught up to you. I want to hear. Okay, more Kevin's holding T. Let's see. Great point. I forgot about Sven Carlin. You remember when I did the reaction video? I came across, I think I was talking to Marcus. He used to have this channel called Trading with a Dummy, and he was telling me how somebody he knew grew big doing reaction videos. And like, you got to do reaction videos. So I tried my hand at it, but it didn't feel right. And I don't know. Maybe it'd be better if it was like if we were all watching something live. That might be better. But let's see. Yeah. So yeah, again, good. We'll see. And again, don't you guys agree? This is why it helps to listen to the earnings call. And quite honestly, right? We'll see this too, where a company beats earnings or misses, and the initial reaction is a sell off or a buy. But after the earnings call, then it can reverse. And that's why, because the companies will give color on what's happening, right? That's a big one. Yep. Hey, I want to say hi. Hello, Daniel. I'll toast you, or toast you with my tea. Jeppy going on. If you're asking me, I don't invest in Jeppy, and I haven't really looked into it. Mr. Ryan Williams does. Dividend Dad, what's up, man? What's going on? Yo, what is that supposed to mean? Oh, funny thing. People know my humor, so people could take this the wrong way. But next time somebody says good morning or hey, how's it going? You're just like, what is that supposed to mean? I do that to my daughter sometimes and she forgets. She's like, what? I'm just saying hello. Like that. And this is another one you can do too. You just ask somebody, hey, do you have a cat? And hopefully they'll say yes. Ask them your cat's name. They'll say, oh, yeah, I have a cat, Mr. Fluffers. Oh, cool. Well, next time you see Mr. Fluffers, tell him I said, psst, psst. That gets a laugh too. Let's see. Oh, Pat, if you sell your brokerage account, you can't buy it in your Roth. Exactly. Because that's under my name. It's associated with my name. So my wife, if she had her own, she's a different person, she could buy it, but correct. And this is something I had to look into. So yes, I sell it in the taxable. I cannot buy Verizon in the Roth because it's still associated with my name and my social security number. So that's exactly right. Let's see. Oh, interesting. Mariana sold AT&T and bought Corning. Nice. Never really looked into them too much. 23. Oh, you know what? I probably should, because I could pick out a few that went both ways. But yeah, that was funny. It was just a thought I had. And I was looking at PepsiCo, but of course, I wanted a little more exposure. So you look back years, right? Even 5 years, and you're like, oh man, I wish I would have bought then. So then the flip side is like, oh, so 5 years from now is 2028. I wonder if we'll be looking back in 2028 at today's prices and saying like, oh man, I thought Apple was overvalued. I should have bought. I wish I could have bought. So it's kind of like, right? Like future casting, but bringing the future back to today. Let's see. Cool. Yeah, your youngest dude. They grew up quick. Talk about nervous. My daughter, when she was driving, boy, I felt I was ready to like grab the wheel and I don't remember it just felt like being on a roller coaster and not being buckled in, man. It was you go driving with a 15-year-old and see how you feel when they have the wheel and you're hoping to God. I was like white knuckling, like please don't, like just focus, slow, keep. Yeah. Anyway, funny. Stays away from Jeppy. Yeah, I've never looked into Jeppy. I know everybody's done Jeppy to death on YouTube, but maybe I should. Maybe I should do a little bit of. There you go. Maybe you just gave me an idea, Shamir, and I think I mentioned this, Ryan. Right? I talked about with you. I should do like find out what's wrong with some ETFs. Everyone always does like why they're so great, but I should do what can I find out that is wrong with them. So the ELNs make them nervous. All right, let's see. During the 30 days only. Yes, from what I understand, it's 30 days. That's it. Once you get to day 31, I can buy Verizon and I'll be fine. So it's just a nice way but up to $3,000. I forgot to add that. So up to $3,000, I can tax loss harvest. So if I get $3,000 in dividends and I realize $3,000 in losses, then I can offset that $3,000 in dividends and pay no income tax on those if it were in a taxable. Obviously, this isn't going to work in a Roth because they're tax advantaged anyway. So let's see. I'm going to get caught up to you guys. My God, look at the time. This is nuts. Oh, dude, he doesn't like McDonald's. Dude, I don't eat McDonald's either, but lots of people do. What did the guy say? Oh, it's so bad. It's so bad. I shouldn't say it. What do you say? I love McDonald's. Poor fat kids be making me rich. You know, there's a nugget of truth there. I feel bad about it, but it's a free world, until McDonald's starts forcing their way into your house and force feeding you their French fries and their hamburgers. I don't have a problem with it because people all make decisions in life, and I don't get high on my own supply that much. So let's see. All right, cool. Oh yeah, by the way, all right, Ryan's got his after party, his Patreon after party going on. So make sure you guys check that out. Beautiful. All right, let me get caught up to you people here. I know I go an hour, but I just enjoy talking to you guys. I love it. I love it. I love it. I love it. Here, Fast Eddie, what's up, man? Yeah, we started with a parking lot too, but what did Ron Burgundy say? That escalated quickly because a week and a half later, she's driving 40 miles an hour. So, yeah. The broomsticks in the cone. Dude, that's awesome. I love it. Don't you miss that? How many years ago was that? This goes to show that life, like investing, goes so freaking quick. It's so quick. It's so quick. Oh, he did do that. It would be a series. That's funny. Maybe I'll do that. I got a video coming up. I've jumped on the trying to pick out 3 cheap stocks for the month ahead. So I got to do the May one, but I think I like that, man. I'm going to start digging in and doing research and seeing what I can find about what is, just you better know this or whatever about Jeppy, about SCH. I kind of did one on SCHD, and it's not a deal breaker video, but it's just more information to help you make a decision, and you should be aware of these things, just more information to be aware of. So, yeah, I honestly, Kevin, I don't vote on those. I don't know. I probably should, but at the end of the day, this is almost like, this probably is like, I don't really vote much in elections either, because I just feel like I guess we have more control over our stocks, but like for president and stuff, I usually don't like the candidates, and I'm usually voting third party anyway, and they get 1% of the vote or less. And I'm just like, you know what? This doesn't, but hey, that's another topic for another day. And let's see. A lot of sick people prop up our Mo shares. Yeah, dude, you can do that, right? You own Mo, so people smoke cigarettes, and then you own the hospitals or the pharmaceutical shares where the sick people are going. So yeah, Paul, I'm glad you liked it. It's sad but true. So Let's see. All right, couple more minutes. Couple more minutes. I want to hear what you guys say. This any part. So this is called harvesting information for us. So let's see. SDIV. I don't know SDIV. Paulo, thank you. I'm gonna look into SDIV. This is great, man. I love this. Should all right. So what do you guys think? Tell me. I don't know. Don't tell me anything. I gotta jump off here. What are you guys doing today? Tell me what you're gonna do in the next 1 minute. Just everybody shout out. What plans do you have today? I'm actually going to be cutting my grass and listening to more of an audiobook or a podcast. So first cut grass of the year. Let's just end it on that. And how about this? We're watching Beef on Netflix. So everybody watching, I wanted you to put down what is the best thing that you've watched on TV, either movie or television show. Just give us some ideas. Let us know what. Yeah. All right. Ryan's listening to the T earnings call. So we want something to watch. I want to know, what should I watch after we're done with Beef? I think we have like 2 or 3 more episodes. So if you guys don't know, that's the thing. The wife and I every night from about like 9:30 to 10:15, have a cocktail and watch our show. It's a little bit of our alone time. So what should we let's see. Let's see. All right, watching hockey, right? All right, Mariana. She's a Bees fan. Nice. We got to know. Animal Kingdom. Dude, I don't know Animal Kingdom. All right. What is this one? Oh, video game. Okay, Wuthering Wave. Hey, like I said, I rarely play video games anymore, but when I do, my favorite one is called Dividend Growth Investing. Have you heard of it? Let's see. Pat, you can go to Seeking Alpha, and on Seeking Alpha, here, I could probably show you. Watch this. Let me just pull this up. I'll show you, Pat. Let me come back to here and share the screen. Share screen. Let me hide your comment first, though, so it's not in the way. There you go. All right. This is where you can go. Sit at the McDonald's. All right. So in here, I know there's a whole. Actually, let's see. I think there was a tab, right? Somebody's like, there is a tab. I don't remember where it is. I'll just pull up one here. There we go. J&J. So I think you should be able to do this for free, obviously on the company's websites, but I believe this is not behind a paywall. So if you click on transcripts, you can do this earnings call transcript or earnings call presentation. Now, again, this may be under a paywall. I don't know exactly, but it's been so long since I've been on. I think it was here. Oh, look at me. This is fun. No, that wasn't it. Where was it? I thought that was it. You know what? Maybe, I don't know. Where was I? It was a little microphone. I thought that was supposed to be it. Maybe they don't have the call up here. Let me try another one. Let me try an old Verizon one. What am I missing here? I swear it was. You know what? I don't know. Here, earnings call presentation. I don't know where it is, guys. I'm losing my mind. I guess it's been so long that I've been going here. The RTR quarter. I don't even know if this is their website. This is not their website. No, maybe it is. Yeah, quarter. I don't know. It's an app here, the Quarter app. So this is super easy. QUARTR. It's free. I know 100% you can listen to it here. You can listen live, but then after it's live, it's recorded, and they'll give you a notification saying whatever company you put in, it'll just went live. They give a ton of stuff. So I would highly recommend checking out the Quarter app on your phone. So, well, that was embarrassing. It's there. I don't think they have it for every company, but they do on the Quarter app, which is why I've been digging it. And all right, let me get to you real quick here. Yeah, Ryan listens through Seeking Alpha. And again, yeah, they have the transcripts there, which I think they do have that on Quarter. I don't know. I'm always listening. Anyway, so I hope that helps you guys out. And I still didn't get a show. What's a show? Got Animal Kingdom from Ryan. Wolf of Wall Street. So we saw that. Good movie. Good movie. Yeah. Paramount, several shows I've liked. Okay, new Star Trek. 1923. Interesting. Oh, is that Star Trek? I never was a Trekkie. I don't know. All right, dude, we're way over. Frank, I'm gonna say good morning, good evening, and good night. All right, what did the Truman Show say? If you haven't seen the Truman Show, I really do like that. Say when he's leaving someone, he'll say good morning, good evening, and if I don't see you, have a good night, or something like that. I don't know. Anyways, guys, check out some of Ryan's stuff. I don't know. Whatever he's got going, cooking on there. Support, show the love. I don't know what I'm doing here. Here we go. This is what I'm looking for. So, again, guys, that was too soon, and I didn't hide Frank's comment. This is where it's called going off the rails. So, anyway, I do thank you for swinging on by the channel and watching a little bit of this live stream. And yeah, subscribe to my newsletter below if you want. I just sent out today. You can catch all my moves, couple thoughts, fun things going on, and show some love to the other Dividend channels in the community. And if you want to join in the conversation on Twitter, find the tweet I sent to John Kopp, I think was his name. We're going to see what's going on. I'll jump over there later and see what's going on. So I thank you so much for stopping by, everybody. I truly do appreciate you spending a Sunday with me, and I will see you next weekend.